Well, we've got with us Conrad Saldanha, Managing Director and Portfolio Manager at Neuberger Berman with us. Conrad, thanks so much for joining in. Good to be speaking. There's so much moving and shifting. And, a bunch of positive domestic news flow, I think, gave some relief to the bulls here in India. We're talking about the GST relief, good monsoons, and generally expectations of a good festive season here. But how much of that is already now in the price? Like I mentioned, the market's rallied about 700 points from the lows it hit earlier this month. Your thoughts?
Thanks, Ravi. I think we definitely needed maybe the Independence Day speech and some more stimulus, given that consumption has been really soft, right? And it comes down to earnings, because India, despite the underperformance you've seen, and it's pretty stark, right? You've seen a 12-month underperformance of almost a double-digit, close to 20% versus emerging markets. And that's driven partly because valuations are not cheap to begin with, but it's been a growth market. And that growth element has kind of faded. You're seeing EPS growth hitting 5% last year. This year, we're looking at 10%. It's going to be more back-end loaded. So you've got to have to see that earnings growth come through, and more from the domestic side, because frankly, you can't rely on the export front, which is also smaller for India in the first place. And given the noise with tariff, I think people are looking for a lot more help, especially in rural, especially in consumption-related areas, which you saw a bit of relief bounce with these share prices. But you got to sustain that, and it has to come through in earnings, Subi.
Absolutely. So what's your positioning, Conrad, on the Indian market right now? Neutral, overweight, underweight, and how does it stack up versus some of the other regional markets that you're in?
So India has been an overweight for us for a long period of time, but a smaller overweight, given that the performance of the market historically had done well, and we didn't find as much of a valuation upside. We have been buying into it when you had those sharp declines, especially in the mid-cap side. But it really comes down to the stock level for us. So we're looking for good domestic companies. I think that whole sales pitch of China +1, seems to have reversed into China -1 right now. But there's so much of domestic impetus on Capex spending that's coming through. I think the government softness on Capex, that hiatus, needs to come back. But you're seeing the private sector coming through and delivering and building up their Capex. And that's what we can pin our hopes on for. So names like, I would say, Jyoti CNC, right? Whether it's giving CNC equipment to Apple, but it's much more for the domestic market. Leave aside the whole export factor on Apple trying to ship out. You're seeing Shyam Metallics adding a lot of aluminum foil capacity. So there's some good triggers for these businesses where you can see the earnings. So first, it comes down to you got to pick the right stocks. It's not just a rising tide raising everything else, and that whole SIP bull run that came through. It's going to be a lot more picky and picking the right names. And I think the domestic side is starting to look pretty good. But it comes down to earnings, Ravi.
Yeah, no, absolutely. Conrad, morning, Prashant here. $55 billion through local investors, even as FIs have sold about $13.5 billion, right? That's just this year. So you're still kind of sort of backing industrial names here. That's the story. And you're saying, well, that push from the government needs to come back. One area which we've spoken about in the past is hospitals. I've seen a complete re-rating. I think Max was on your radar. How do you think about valuations here? And does one rotate out of something into something else? It's last 1 year, 1.5 years, even laggards like names like HCG, etc. have re-rated. Narayana Health's cheapest is a lot, but still, that's over 50 times now in terms of earnings. What's your sense?
So when I talk, Prashant, to your question on broader Capex, I'm not looking for big, heavy Capex, right? So these are much more niche businesses that are adding that capacity, and they're not looking for major spend that has been slightly slower to come about, right? Given elections, all this other stuff, especially from the government standpoint. To answer your question more on healthcare, I like the domestic healthcare stuff. It's defensive. Absolutely agree with you that there was a point in time for us when we look at on a cash flow EBITDA metrics, you could buy them at 15, 17 times earnings. We probably owned a handful of these companies. I still think Apollo Hospital looks interesting. It's definitely on a valuation basis. It's a discount. They are focusing on operating efficiency. Their bed ramp up, maybe not as high as someone like a Max in terms of new capacity, but it's pretty good. So I would say that still looks interesting. We've owned JB Chems for a while. Now that's in a bid situation with Torrent. But again, domestic business, you look at the earnings coming through is good. I'm not relying entirely on where this whole Section 232 sector tariffs start to come in. That's going to create a bit of noise. But they're executing, and I think people want security in a very uncertain global environment. And I think that's why the hospitals do well. I agree on multiples; they're not as conducive as they were, but you got to pick within that space.
All right. Hi, Conrad. Good to see you in after a while. What about tech? That's a space where you are selectively looking in. How are you all positioned on tech? The problem is tech has underperformed. But in the last couple of weeks, it's been showing like at least it's the place to hide. The problem is downside could be protected, but you may not make big returns from here. How are you positioned on that one?
Fair enough. Nigel, good to see you again. I think, so I look at tech globally as well, right? So I would say on the hardware side, something like a NetWeb, I think, is more basic in terms of its data center assembly business. I like that. I like, Dixon's, multiples aside. I know we spoke about multiples on the hospital companies. But I think these are good executors. They've got a long runway for them over the next 3-5 years. On the services side, I've been suspect for a few years now, and you've seen that growth really start to fade, even before a lot of what potentially could be on the tariff side. Do we start to pivot, in the US and look more at services? But you've seen that AI disruption, and we are big investors on the AI front in hardware, whether it's on the GPU side with the NVIDIAs of the world, it's ASIC, et cetera. That's going to be disruptive for sure. And the billings have been softer, but the smaller companies, to be fair, have done well. I mean, I would say like a Coforge is executing. You're seeing Persistent. So you're seeing a few niche businesses. I would say Hexaware that listed recently. But for the bigger guys, it's a bit of a challenge, right? How do you overcome that growth slowdown? Hirings haven't really accelerated. You look at even the compensation structures haven't really progressed for a while. So you've got to pick and choose again over there. But broadly, I would say IT services is an area that's going through adjustment, and we're not sure how this AI impact is going to happen on these businesses, which might be good in the longer term, but in the near term, a lot of the Capex, to be fair, when you speak to BFSI and companies in the US, they're spending a fair bit, 20-30% on AI.
Yeah, no, absolutely. And of course, I mean, some companies have been spending hundreds of millions of dollars on individuals, right? Meta
Prashant, your point, I mean, is a valid one. I mean, I look at the numbers and just adding it through, and you think of the hyperscalers, $50, $80, $100 billion. That spend is the biggest contribution to US GDP potentially in the second quarter of this year already.
No, the biggest gold rush ever. I don't use that word lightly. Thanks very much, Conrad. It's always great to have you with us here on the program. Appreciate your time here, as always. Let me just quickly run you through